It's Thursday, and we have Matt Cheslock from Virtu Financial here to talk the stock market. Hey, Matt, how's it going?
Pretty good. I got a haircut this week finally, and I think the market's taken a little bit of one here this week. So not the greatest week, but we'll get through it. We got a long weekend to rally back.
I like that, Matt, and I think our viewers will definitely enjoy your haircut and your quips there. Speaking of haircut, looks like NASDAQ tech shares are taking the worst of it this week. Some traders like to view tech almost like a commodity as far as seasonality goes, especially the chip stocks. What do you think about that?
Well, when the chips get sold like they are now, I mean, there's a definitive reason for it this time. So it's not just earnings related or something. This is all about the U.S.-China relations, and this is the first one to hit. It's the hardest to be hit right now because it's going to be at the front line of the negotiating. So if we get any kind of turn, this sell-off could be kind of steep, and it could be worth a buying opportunity because people are going to be getting back into it full force because they've been hit the hardest.
All right, so that could be a nice play. Meanwhile, the yield curve inverted again. What's to blame for that? Is it the Fed? Is it China?
Well, it's a daily occurrence when the market goes down. We see the yield curve invert. So I think it's a little bit of both. I think the Fed has been adamant about not moving on rates, so we're not going to get that rate cut the market was hoping for. But that being said, if this U.S.-China deal continues to go through the summer without any progression, they may be forced to do it because the economy may really erode. We're starting to see stats that are starting to move in that manner, but are they one-off? That's the question. Is there sustainability in these lower economic numbers? Is the Fed going to be forced to react? And that's kind of where we are right now. It's a little disconcerting, and that's why this market is so volatile because there's no clarity, and this market really wants some kind of clarity.
Certainly need some clarity. A lot of people are against the central banks, especially Bitcoin traders. Any thoughts on Bitcoin?
Bitcoin had that tremendous rally, right? And it caught people off guard, and you see these gaps that take place. It's held up there pretty well. Kind of like, look at oil right now, too. Oil sold off aggressively today after some really bearish inventory numbers as far as, for a bull goes. Bitcoin is kind of in the same parameter. When the market is kind of weak, we're starting to see gold have a little bit of rally. Bitcoin is now taking a little bit of that up as far as a safe haven play or an alternative play other than equities. And that's why you saw that huge spike over the last 2 weeks, getting to 8,000, not being able to hold it, but still an enormous rally.
So do you think that's why there hasn't been a lot of action in gold because people are going to Bitcoin, or is there some manipulation going on in those markets?
I certainly think that has something to do with it. It's the millennial way to invest in a safe haven play. The older generation bought gold. Gold has struggled to find that bid to it. Today we've finally gotten a little bit, and that's because there's a lot of destruction in some other sectors, with the Russell being down, transports being down, gold, oil being down. Where else are you going to put your money? You're going to probably put it in something else. Gold has gotten that play, so maybe you reallocate your more money to your portfolio, moving from 5 to 10% in maybe a gold. Maybe you're starting to invest in a crypto. When you get moves like that, people get really excited about investing in it.